what have you learned over your career in terms of the principles? How do you evaluate an investment opportunity? What does a trustee actually do?
Well, those are two different questions because the average person isn't going to have access to $80 billion. But I'll start from the smaller, from like what an average person can look at an asset because the principles
Let's
are
do
actually
that.
still the same. So you want something ultimately that will go up in value over time. Let's say you could own a business and the business sells cookies and the cookie business gives you $1,000 a month and you can own it for 10 years. So you'll take that amount. I bought the business. I make $1,000 a month or make 12,000 bucks a year. I'm going to sell it in 10 years. Hopefully I can increase the amount that I sell for 10 years from now. And then you're going to sell it. How much can I sell it for? How confident are you that you can make $1,000 a month? How confident are you that you can grow that $1,000 a month, which is essentially your dividend? It's your profit, but ultimately it's like your dividend for how much you paid. And then at the end of the day, it's like, how much were they going to sell it for? What I have today that I bought at $1 million can become worth 1.5. So that's one type of thing, something that cash flows. Different kind of thing is saying, all right, I may not be able to get the money back in 10 years. So I'm going to put in $1 million. How much money do I need to be able to get in 10 years for me to feel like that was worth it to me? Because that's your reversion value. If you put all of your hope in your reversion value, then you're going to ask for a lot bigger reversion value. And you have to think to yourself, on both cases, what could go wrong? And if you go through and you find every possible thing about what could go wrong, but I feel pretty good that like that's a pretty low risk and something else is much more likely to happen, well, then you have an asset because you've thought about it as an investment. You've thought about how to be able to make it, and you thought about what it should be able to get you over time. You can apply that to anything. Now, if you're an $80 billion pension fund, you can't just do that with one business or one stock or one real estate deal. You have to think about, I need to be able to pay off the liabilities, which essentially are the pension fund payments to my pensioners, basically forever. So my objective is to make so much that the amount that I make in returns covers or exceeds the cost that is needed to pay for those pensioners. So at 80 billion matters a lot less. If you have $1 billion of that in cash, you really don't have 80 billion. You have 79 billion. Now, that sounds great. But the thing is, if you need to make a 7.5% or an 8% or a 7% return, that's off of the 80 billion, but you have that dragging you down. Then you also need to have something might be in cash, something else might need to be in cash, but close to cash. So you're going to have a lower return. So you might get something that might make you 5 or 6%, which means means that everything else in your portfolio needs to get you much, much way above the 8%. So you can blend them together. Those things that you're betting on within the economy that get you above that 8%. And that's when you start talking about like the value add in real estate being 12 and 15. But at the end of the day, you need to find something that is a big enough trend that you believe in and say, I'm betting on this thing being generally right, and then finding people, managers essentially, who can execute on that trend. So some people will say, I believe that technology will keep on getting better and that the world is going to get better because of technology and that AI is going to cut more jobs, which means companies will get more valuable. So I want to be invested in the stack of things that are either making the money from the AI. Some people say, I see affordable housing as a need because if it's built, people will rent it for sure. But then how much does it cost me to get that affordable housing? So you put all that, and that's your real estate bucket. But then you have to do the same thing for private equity. So who's the folks that you ultimately going to lease to? If you have real estate, if you're commercial real estate, you're going to be leasing to companies, and these companies have to find a way to make money. So if they're selling the cookies or they're selling the toy, whatever, they have to figure out how to make their money, and you have to see how they're supposed to be able to grow. What a trustee does is set the strategic allocations, the asset allocations of what's needed. What's the percentage that should go to fixed income? What's the percentage that should go to private equity? What's the percentage that should go to public equity? So we're doing much more of a strategic setting of where things should go, being thoughtful and asking questions like, why is it that we are putting stuff here? For public pension funds in particular, you get people who are represented by the pension funds. So you've got your folks that civil engineers, you've got your folks that are firemen and police and folks that do construction and garbage. So you have those folks, they need to be represented. And then they have folks that are appointed. And I was one of the appointed people. So we're out in the world. So we're not in the office. We're different. So we can bring in different viewpoints and then be able to ask questions to make sure that we're better managing the money in the portfolio. So because we need to make sure that it all grows and we all need to have a voice. We're the ones that make those decisions, or we're the ones that approve final decisions that then tell what the chief investment officer and the chief operating officer and the chief executive officer do. So Kopa Market is a means to do it through using economics and marketplace and behavioral economics and psychology to get people to be able to own the world in the way they want to. And then Kopa Hub is the tools to be able to do that and not get screwed over, because we ingest our first we'll be comparing the first 24,000 lines of data across 80 different documents that are for true deep due diligence from whatever I did in private equity. I've done $2.5 billion of experience. My team has done 12. We've taken all that we've known, all the things that we could have ever asked for that go into an investment community memo or anything else. And we say, great, someone, a broker, a seller, a borrower is going to apply. They're going to give you the 80 documents you need to do for due diligence. We're going to extract the first 300 lines of data that are most important to getting a deal done, but it's going to increase over time to over 800. We bring all that in. We then compare it against the documents, against what they said, and then we compare those information against third-party information that they can't go back and game. So you can't game your municipal records and your taxes. You can't game Google reviews. You can't game the USPS. So we provide a lot of things. If all those things add up and they line up the way they're supposed to, then we say, great. And then we give you a task manager to make sure that everything is actually correct. And then once we have all the information that you said is all correct, we say, great. Now you want to write your investment committee memo or your credit memo or your offering memorandum? Cool. We know what's right. We can go ahead and generate that for you, but it's based off of your own data. And that's our first product. And we're going to have another 12 that are already in the pipeline. We have 2 that are actually already in prototype. And we'll be able to replace Argus for commercial properties. So replace Excel, we replace DEX, we replace asset management and property management. We're going to grow because once we have all that data in the first place, now it's about showing it to the right people at the right places and the right times.
Okay, welcome to another episode of Affordable Housing and Real Estate Investing. Guys, when I first met Trevor, I was like, what is this guy doing? And today he's gonna challenge everything about what you think you know about real estate, ownership, capital markets work. He's a founder of Kopa, and he has a platform that's kind of turning real estate that's income producing into something that anyone can own, right? In any geography across the world. At the same time, he's also a trustee where they're overseeing billions of dollars at the Los Angeles County Employee Retirement Association, one of the biggest pension funds in the United States. So if you're building affordable housing, right, you're raising capital, you're trying to scale some sort of community-driven investment, because I believe everyone that listens to this podcast, you're trying to do something good with your time, your energy, your resources. This conversation is going to freaking light you up, because I was jazzed about it. I was telling Trevor how excited I was before this, and this is just a continuation of where the conversation was. So he's gonna flip the script on who gets to own the future. This is so freaking cool. Trevor, so before we get into all this, man, like who are you? How did you get into this world of becoming a trustee of one of the largest pension funds and founding your own company, man? Tell us more.
I mean, owning the future is a really good tagline. So first off, thank you for that. I might have to steal that, but just letting you know. I'll do the quick story, but I'm from Pasadena, Altadena. Went to a bunch of poor schools and rich schools growing up. So I got a chance to see folks that, because they didn't have the education or whatnot, didn't get the opportunities to be able to grow up and do something they really wanted to do because we were told we were dumb early. And then folks in private school that did get a chance to go do those things. And I'm like, well, that's not right. And so I started thinking about how would I fix that and help my homies from back in Dena. And that took me all around the world. So took me from community organizing with the folks that trained Obama and working with the civil rights icon Bob Moses, through to the state legislature and helping pass bills into law for the state of California and the California State Assembly, to some time in China, doing some human rights research, to being a professor in Brazil, realizing that the way to help people be able to like my personal life is going to be about helping a particular city in Brazil do this and scale up and like create and get people from poverty into the middle class there. And then from that, I said I had to be able to do finance and learn how finance worked to make that happen. So worked at a nonprofit for a couple of years that was much more focused on business school, positive and social environmental outcomes. Go to business school at the University of Chicago. Then realize that finance is a really big world, so you can't just do finance. You have to figure out what your vertical is. So then the first thing was CalPERS and researching how income inequality would affect the fund in the next 30 years. A second internship at GCM Grosvenor. So I was looking at hedge fund of funds and manager selection. But I'm like, if I'm going to do finance and I got to help people out of poverty, it's going to have to be something that people can see, feel, and touch. So real estate was what I did. Started out as an analyst at a brokerage called HFF. Then did some real estate consulting, then did real estate private equity at a debt fund, then became COO of a developer, and then started Kopa. And then in the meantime, because of meeting good people all the way along the way, you have to know, like everyone that you talk to, without having any kind of ulterior motive, good people are good people. And what they do later on in life can affect you. So I have a very good friend who ended up working for a supervisor in LA, which is one of the five. There's five women, so they're the five queens of LA for LA County. And I was helping her with some stuff just randomly because it was nice to do. And then she goes like, "What do you think about doing this thing for Lacera?" And I'm like, "Well, in my private equity days, that was a really big name. So I'm like, I don't know if I'm qualified. I'm a little young for that." She goes, "I think you got the finance background, but now you also always had the heart and you cared about the people of LA and California. So you'd be okay for it." So I did that last year. I was a trustee throughout of all 2024. So we managed, when I was there, it was 80 to $81 billion. And then I'm on a mandated year off, and it looks like I'm going to be back on next year. So, and that'll be for another 3-year term.
Whoa, dude. I mean, I kind of just want to highlight how you kind of landed at one of those positions. And I want to call out that you, at one point, you didn't feel like you were qualified.
Yeah.
And I feel like there's so many people right now that are listening that probably just felt just like us, like, hey, we want to make an impact. But because of where we grew up, our backgrounds, our lack of connections in the beginning, we never thought that could be a game for us.
Yep.
I used to walk by apartment buildings being built, and I was like, that's a big boy game. That's a boys club. I will never be able to kind of get in there. And you just shattered that belief for so many people listening right now. Because all you did was you were a good, kind person with the right heart, the right intention, and people saw that. And you got an opportunity that probably only very experienced people or
Mhm.
much older folks might
Mhm.
ever be in a position for. So I like to ask these questions in a way, man, that let's say we get hit by a bus tomorrow. God forbid that happens.
Mhm.
But the lessons that we want to leave for our kids is probably what's the most important. That's why I record these podcasts. And so that my daughter and my son now
Mhm.
can listen to this one day. It's like, oh crap, dad asked that question for us so that we know what to do when the same opportunity comes up. So if you had to give some advice to like your kid growing up and God forbid you get hit by a bus tomorrow, what's the one lesson that you learn about building relationships that you want to pass on to them?
That's a good question. It's funny. The first thing I implicitly react because I'm like, well, in the real world, for someone to give advice means that they feel like they know enough to give somebody else, like, this is how you do something. And I'm like, I know there's so many different ways of trying to get there. There's so many different ways of how it could work. So I'm like, my son, I'll know better, but others, I don't. But something that once it got into my head, so there was a book called Think and Grow Rich that someone introduced to me when I was in business school. And I hated, and he told me I would hate the book, and I did. And he said, if you read it the second time, you'll hate it, but you won't hate it as much the third time. And I probably read it now like 20 something times. And it's because it makes something seem so much simpler than it actually seems like to us, because we think that there's so many different layers. This has to stop with that, right? But at the end of the day, between that and my grandfather once telling me, did you try your best? Because if you tried your
Mm.
best, then you can't be sad at the outcome, because by definition, you could not have done more. And it's between that and knowing that you can't lose, because tomorrow or the next hour is always a new opportunity to do something. You're never stuck in time. Time keeps moving. We keep moving. Therefore, I may have experienced temporary defeat, but I don't even call it defeat. I experienced temporary learning. And anything that's really worth doing is going to take a lot of time and a lot of effort and a lot of banging your head against the wall. But when you get to that point, everything with Kopa was only because I just banged my head against the wall in different places. And I was like, well, how do I get to this goal? Right. So if you know that you can't lose because you're about the right thing, you're focused on the right things, you're going to be kind, you're going to be decent along the way. If you know those things and that is who you are, then I'm going to learn it eventually. So if I keep on dedicating myself to it, it's going to happen. So that's what I want my son to know, because none of us can lose. The other thing is that was a very individual Trevor thing. But if you see that we're all connected together, so we can all try to go towards something, but realize that we live in a society of a bunch of people and we all want to get things better together. If we do that, then definitionally we'll be able to help others along the way, because it's not going to just be in our interest altruistically, but it's also like we all need to feel this. We're all in the same boat. The more we open our eyes, we see what's actually coming around the corner. We see each other as human beings. And then we keep on trying to get towards something bigger. Game's done. Whether it's affordable housing or it's sailing around the world, whatever you want to do, it's going to happen.
Wow. Dude, that was such well said. And I kind of relate to it because I mean, when I started a podcast, everyone told me, Kent, you're never going to be able to solve this problem. Like, who do you think you are that you're going to solve this problem? And I always said, hey, I beg to differ, because I knew that eventually if we keep helping people without any expectations, without any of the alternative motives that you talked about, we collect another piece to that puzzle. And finally, I got to meet you, Trevor. And I was like, oh, this guy is doing something that might actually work. So my job after creating this platform is like, how do I shine a spotlight on someone that's doing the thing, being creative, not just settling for the status quo, but also trying to figure out how do I lift up everybody else, bring them along, and give them an opportunity, give them the education, give them the tools that's going to help them look at life, look at assets in a little different way that they might not have ever been afforded the opportunity to do so.
Yep.
So Trevor, let's dive in a little bit deeper. So I love how you build relationships and kind of let you to all these opportunities and learning all this experience over your lifetime. But what was the problem that you were trying to solve for with starting Kopa?
It's funny because it's this big mass of words. So I apologize in advance if it just gets real wordy. But at the end of the day, human beings are the same. We have the same hopes, dreams, whether we want to do better for ourselves, for our kids, our families. Families, if you think that there's a self, there's a family, and then there's a community, neighborhood, then a community, then a city, and people at countries, but people get involved in different levels. But at the end of the day, it's like we want to leave this better than what we found. I would say 98%, 99% of people want that. They don't necessarily need to have a mansion or a yacht or whatever. They're just like, I want to live something better for my kids, and I want us all to get better along in life. From my research in human rights stuff when I was in Beijing, to my professorships working stuff in Brazil, to working in Northeast LA and community organizing, everybody says the same thing. So my thing was, the first thing is that we're always divided against each other, whether it's along the lines of race, whether it is along the lines of socioeconomics, whatever, religion, political ideology. We're all told to fight each other because we think that the pie is limited. And it's like, no, it doesn't need to be. We actually could make this much better off. Why was it good at one point for some group of people? And then what will we need to do to fix that and do it again in a new way? So Kopa at its core was about how do we increase ownership for everybody, full stop. If we increase ownership, then people that feel they have a stake in the economy, they have a stake, but more broadly, the economy is very broad. How you have a stake in your life. Because right now, everything has been going from like, you used to be able to buy an appliance and it will last for 50 years. Now it's supposed to be functional obsolescence and it dies. iPhone has to come out every year, right? It's become this thing. And as that happens too, everything else has also become some kind of service. So you actually don't own what you have. If someone decides to stop fixing it, then it's dead, right? And then because of that, we don't feel as much of generally, most people don't feel as much of a connection because it's like, oh, whatever, if that goes bad, that's for them. Or if there's a problem around the world, that's their problem. But if you start realizing, well, actually, no, I'm involved with this. I have agency in this. I don't want to be a passive receiver of, but I'm an actor in, then the world can change. So Kopa Market is a means to do it through using economics and marketplace and behavioral economics and psychology to get people to be able to own the world in the way they want to. And then Kopa Hub is the tools to be able to do that and not get screwed over, because oftentimes if you don't know what you're doing, you can miss and you don't want to look like a fool, which will stop you from going in the first place. So if I can decrease your downside of something going wrong while you do the underwriting and due diligence on your platform, and then on the other side, I can make sure that people have access to wealth and economic growth and that we can actually help each other and own in each other's communities and see ourselves as that natural that we all, as our human selves are. And of course, also give some financial stability because a lot of people don't have any wealth at all. If you take that psychological safety, see people for who they are, and recognize that we're actually a lot more similar, then the whole world changes because we act differently, we interact differently, we feel differently, we care about our neighbors. And our neighbors, whether they're next door or they're across the globe, we care about that because it actually matters to us. We need to get away from the renter society, not renter, like it's fine to rent in your apartment. We're getting away from the renter. Let's make everything a service. Let's lease everything out. We need to get away from that. So how can we do that so that we can scale that up?
Wow, man, I really love the macro overarching theme, what you have created, because you said it best. It's like we want to care about our neighbors, not just our next door neighbor, but people across the borders, across the world, and look out for them. Because every day we see images of war, violence across, and you're like, how do we stop that? And you told me the story over dinner, but I was like, wow, that's true. If we all had a stake in that country or that area where they're going through such turmoil, well, wouldn't we be invested in either saying something or stopping it at the very minimum? You're creating that
I'll do you one
to,
better. How many geniuses live in areas right now that don't have access that could build our renewable clean energy? And that's not just within countries that maybe have war and famine. There's countries like even within the US, a lot of people are left behind. There's a very small number of people that actually get access to the opportunity needed to be able to make something big. If you gave everybody merit and the ability to work hard and make something, there's so many more people in the world than there are that have access. We would all be able to build more things that would help us all out in ways that we can't fathom just from one viewpoint of living in the LA area or in the United States or being Western, whatever. There's a lot of different folk. Arabs invented the number zero in most of our numerology. Chinese invented gunpowder and paper. Like, we all come together to make this stuff. And then it's like, okay, well, now we're going to go into our corners. No, no, no. Why don't we do more together?
right. And this is so interesting because I read some of the articles that you wrote about the ownership crisis, and I want to take 1 minute to kind of allow you to explain what is the ownership crisis. I think in your article you talked about 1979 as like one of the critical year as you saw the gap between wages and asset value getting bigger and bigger. Can you just take 1 minute to explain like what happened? Because I don't think a lot of people understand the genesis. I know you've studied this, but not a lot of people really understand why this even happened in the first place. So please take a minute, explain the problem for folks.
Yeah, so if you think about it, after World War II, the US had a bunch of money. It had most of the gold reserves in the world, and it had a growing population, and Europe was ravaged, and there wasn't a lot of economics happening in the rest of the world because of World War II. So the US pumped a lot of money into Europe, but into American companies. And then from that, the revenues from those companies went back to the US. It was like a recycle program. The US political structure was very smart to say, okay, we're going to have all this money. Let's make everybody better off. So the GI Bill comes out. That's a big one. And this was also right after FDR did all the stuff with the New Deal. And then let's do mortgages so people can buy homes. Let's do whatever. Let's make it possible so that the average person, the middle class person, can do really, really well. And then there was the issue with the Soviet Union. But otherwise, the US was as best it's ever been in terms of its growth and its stability for most people. Then I know what happened in economic history, but so what I think happened is people are like, okay, this is going to happen forever. So now why don't I just take a little bit more for myself? So why don't I decrease the taxes here, and then I'll make my little more money for myself over here? And then this is during the Reagan years. Why don't I focus on these issues and I'll focus on these problems here, but then we'll also have like Wall Street hit news highs. And so what kept on happening is, so 79 going forward is when that difference happened. If you had an asset before, you would get around the same return because your wage growth was going around the same rate. So you could own a property and you could work and you'd be about the same because people are going to keep on growing up because American goods are going all around the world. Then you start getting a difference where it's like, okay, well, now if I'm a company owner and I want to make more profit, but so you get Milton Friedman and all those folks, profit is king. Okay, cool. So now you've got say people saying, well, I don't have to pay people so much. I could pay them less and I can still I could export these jobs somewhere else. Let's do free trade. Let's do this or that. So now you've got people saying, okay, well, I can still make more revenue, but I have to pay less. And now my profit's going up. So now those companies are worth more money. But who owned those companies in the first place? Before it was everyone just working. Wages would brought people their money. So it was like, okay, well, now those that owned just got more and more and more rich. And so it was policy stuff. And I don't know if it was intended that way, but that was the outcome, is that people doing their like whatever policy decisions they made kept on making that cleavage get bigger and bigger and bigger. And what happened over time as those numbers kept going up, the differences in between those means that those few people that own those assets, there's not enough people that own enough assets. You need to have a strong middle class to buy new things. So if you make a new company, you need people to buy your stuff. If there's no one to buy your stuff, it doesn't matter how good your company is, unless you only sell to rich people. So like right now in this last quarter, I think like half of the spending came from the top 10% because there's so few. But if you have broad-based economic growth, then everyone's doing okay. Everyone's growing together. And that's just become further and further away because once you start getting an asset, you can then start, and then of course you get private equity, and those folks are like, "Oh, I could really make your assets go even more. I can lever it and go even higher." So you just get this kind of curve, this kind of flattening, and you're like, "Oh, that seems off." And then of course everybody that doesn't know about assets is going to school, taking on more and more debt. So they're trying to do the W-2 thing. They're trying to be workers. But the people that own the country is like, I don't want you. I would much rather be able to make money infinitely and then kick you out. And so AI is like the end goal of that. But that's the whole thing. Everyone's just doing that. It's like, how can I maximize profit for myself? And so what you're seeing over time is people who are like, I've worked this hard, I've gone to college, and number of people in colleges have gone up quite a bit. The number of the people that have student loan debt has ballooned. But there's no real ability for those people to continue doing that when someone's trying to cut off the ability for them to make money. So people are feeling bad. People are feeling like this is all my fault, that I did everything I was supposed to do. Some folks now are getting to the point saying that's not my fault. I did what I was supposed to do and the system didn't provide. Others are feeling really bad internally, like, man, this is really on me. And it's not. A lot of the policy stuff has been made that those with assets are the ones who are making the rules now. That is for the one big beautiful bill that much higher, right? Then you have this thing of like, okay, well, there's not as much growth, which means there's not as much hope. And then you have COVID hit, and then you have people that are getting lonely and not able to talk to each other. And it's like, so we have an loneliness epidemic, and I wrote this in 2023. So like a loneliness epidemic was starting, now it's huge. We've got people trying to make AI bots now to combat loneliness. You've got algorithms putting you in your own little space and not hearing anything from anyone else. If anyone disagrees with you, you can easily cut them out. And it's like we're becoming so much more individualistic because that's the only way for you not to see the big picture that everybody else is doing this and the assets are doing that. And you're like, okay, so let me get some money to put in some assets. Well, if you put some money in assets, yeah, they might go up. But if you started way back here, that money has gone up quite a bit. You're trying to get it to this point and you want to see how it works. It's much more difficult to do. So it's a crisis of feeling like you're like, where is this supposed to go for me? And a lot of people rightfully are feeling very afraid.
And that is such a deep hole that many people, if you continue following the traditional trajectory of going to college, getting a job, hoping and praying that you save enough money for the first down payment to own your home, after COVID, it went up like 10, 20%.
Mm-hmm.
I'm sure wages didn't go up 10, 20% in a year. So this is why there is such a big gap. And the feeling of loneliness, the helplessness that you talked about, Trevor, man, it's just so relatable. I have so many friends out there that are right now telling me like, dude, it's almost impossible. We thought we're so close to saving up for the first down payment. And then you have this big jump that just something that was so close within grasp just completely disappeared between home prices, between interest rates. I mean, it just didn't work
Well, then
anymore.
also
So
don't forget
thank you so much.
the all cash buyers. So most of those were all cash buyers that came from those with families that already had assets. So if you had a mortgage, you're still not even like just even if you said I'll pay you the same, but it's going to pay me. Nah, I don't want to deal with that. I'll take all cash. So it's like, where are you supposed if you don't start from this place? Where are you supposed to go? And then of course we don't build enough housing to get us out of that because those that have assets want to see their assets keep on going up in value, which is normal, but policy wise, not overall sustainable.
Man, so I love that you laid out the foundation of the problem because now I want to transition the conversation a little bit into, right? People, you talk about ownership, right, Trevor? But there's a lot of people out there that don't even know like what's a good asset to own.
Mm-hmm.
How do I make the right investment decision? So I want to blend a little bit between one, what have you learned over your career in terms of the principles? How do you evaluate an investment opportunity? And then let's talk about your time at Lacera, like how for people that don't know like what a large pension fund or how does it even work, like what does a trustee actually do?
Well, those are two different questions because the average person isn't going to have access to $80 billion. So,
Yes,
but I'll start from the smaller, from like what an average person can look at an asset because the
let's
principles are
do
actually
that.
still the same. So you want something ultimately that will go up in value over time. Some people say, well, if you could take, let's say, you could own a business and the business sells cookies and the cookie business gives you $1,000 a month and you can own it for 10 years. So you'll take that amount and say, how much to make it in 10 years? I bought the business. I make $1,000 a month or make 12,000 bucks a year. I'm going to sell it in 10 years. Hopefully I can increase the amount that I sell. So it's not just $1,000 a month for 10 years from now, but let's say that's the case. And then you're going to sell it. How much can I sell it for? How confident are you that you can make $1,000 a month? How confident are you that you can grow that $1,000 a month, which is essentially your dividend? It's your profit, but ultimately it's like your dividend for how much you paid. Whether if you're buying into real estate, the rents that you receive, your NOI before you take out your debt, that's your dividend. And then at the end of the day, it's like, how much would they sell it for? Do I think that in the future, what I have today that I bought at a million can become worth 1.5, right? So that's one type of thing, something that cash flows. Different kind of thing is saying, all right, I may not be able to get the money back in 10 years, so I'm going to put in $1 million. How much money do I need to be able to get in 10 years for me to feel like that was worth it to me?
Mm.
Because that's your reversion value. If you put all of your hope in your reversion value, then you're going to ask for a lot bigger reversion value. And you have to think to yourself, on both cases, what could go wrong? And if you go through and you find every possible thing about what could go wrong, and if you get to a point of saying, wow, I've looked through everything, here's a chance that this can go off, this could go off, this could go off, this could go off. But I feel pretty good that like that's a pretty low risk and something else is much more likely to happen. Well, then you have an asset because you've thought about it as an investment. You've thought about how to be able to make it, and you thought about what it should be able to get you over time. You can apply that to anything. Now, if you're an $80 billion pension fund, you can't just do that with one business or one stock or one real estate
Mhm.
deal. You have to think about, I need to be able to pay off the liabilities, which essentially are the pension fund payments to my pensioners, basically forever. So I need to make my objective is to make so much that the amount that I make in returns covers or exceeds the cost that is needed to pay for those pensioners. Why that matters is number one, you need to have cash on hand to be able to actually pay off pensioners, right? So at 80 billion matters a lot less. If you have a billion of that in cash, you really don't have 80 billion. You have 79 billion. Now, that sounds great, but the thing is, you need to make if you need to make a 7.5% or an 8% or a 7% return, that's off of the 80 billion, but you have that dragging you down. Then you also need to have something might be in cash, something else might need to be in cash, but close to cash. So you're going to have a lower return. So you might get something that might make you 5 or 6%, which means means that everything else in your portfolio needs to get you much, much, much above, way above the 8%, so you can blend them together. Those things that you're betting on within the economy that get you above that 8%. You're talking that's when you start talking about like the value add in real estate being 12 and 15 and opportunistic being 20 and now maybe more because of the interest rate issue. But at the end of the day, you need to find something that is big enough, a big enough trend that you believe in and say, I'm betting on this thing being generally right. And then finding people, managers essentially, who can execute on that trend. So some people will say, I believe that technology will keep on getting better and that the world is going to get better because of technology and that it's going to, for AI, it's going to cut more jobs, which means companies will get more valuable. So I want to be invested in the stack of things that are either making the money from the AI or making or cutting jobs. Some people might say, I see infrastructure as a play because that's a way to grow this up. Some people say, I see affordable housing as a need because if it's built, people will rent it for sure. But then how much does it cost me to get that affordable housing, right? Depending on what city and state and municipality you're in. So you're putting all that, and that's your real estate bucket. But then you have to do the same thing for private equity. So who's the folks that you ultimately going to lease to? If you have real estate, if you're commercial real estate, you're going to be listening to companies, and these companies have to find a way to make money. So if they're selling the cookies, or they're selling they're a toy store, or they're selling whatever, they have to figure out how to make their money, and you have to see how they're supposed to be able to grow. Then you have to think about equities. Well, do you do it in a private equity way? Do you do it in a public equity way? Well, private equity is supposed to get you a longer return over longer time period. Sounds great, but then you don't have access to your money. You can put in the stock market and get access to it right away, but stock market goes like this. And then when trustees don't do the actual run the day to day, there's an entire investment staff for that, and at Lacera, they're fantastic. What a trustee does is set the strategic allocations, the asset allocations of what's needed in these different places. So, like, what's the percentage that should go to fixed income? What's the percentage that should go to private equity? What's the percentage that should go to public equity? So, we're doing much more of a strategic setting of where things should go. And then being thoughtful and asking questions like, why is it that we are putting stuff here? And then, of course, because we're in the world. So, for public pension funds in particular, you get people who are represented by the pension fund. So you've got your folks that civil engineers, you've got your folks that are firemen and police and folks that do construction and garbage waste removal. So you have those folks, they need to be represented. And then they have folks that are appointed. And I was one of the appointed people. So we're out in the world. So we're not in the office. We're different. So we can bring in different viewpoints and then be able to ask questions to make sure that we're better managing the money in the portfolio. So, because we need to make sure that it all grows and we all need to have a voice. So, my job is to look at things and say, does that make sense? Or, I don't know about that one. This is a little different. Let's ask a question about this. Have we considered this thing? Have we thought about this thing? Have we voted on something that it's like the board of directors within a company? We're the ones that make those decisions, or we're the ones that approve final decisions that then tell what the chief investment officer and the chief operating officer and the chief executive officer do.
Wow, dude. I mean, that was so well explained because I love how you started with the principles in the beginning.
Mhm.
Because how you talked about, hey, you could be buying a cookie business, but you got to figure out, hey, what are the risks that might happen and how do I mitigate that risk?
Mhm.
So we have people listening that are single family investors all the way to real estate developers, thousands of apartments. But the principles are the same. It's like, hey, for this single family home that I'm buying, what am I buying for? And I love how you talked about reversion value. You're the first person on the podcast to actually talk about that
Oh.
because that's a great analogy. Because not a lot of people think about, hey, well, how much money do I want to walk away with at end of year 10? Because now I get back into, well, by 10 years, my roof might need to get repaired. My HVAC unit might need to get repaired, assuming the HVAC unit doesn't get stolen in the first place.
Mhm.
But oh, wait, if it gets stolen, maybe I can put a cage on that HVAC unit to make sure it doesn't get stolen so easily for the copper and whatnot, because that's the same principle you want to apply to much larger investments.
Yep.
But the magnitude might just be different.
Yep.
It might be instead of one HVAC unit, you have 200 HVAC units
Yep.
or window AC units that might be getting stolen right off the windows. But the issue is still, how are you evaluating the risk? What's the percentage of that risk actually taking place? And how are you mitigating that risk of happening?
Mhm.
So I love how you explain that, Trevor, because that makes perfect sense. And I think the average everyday person can listen to that and like, oh, what can go wrong? Instead of saying the word risk, I ask what can go wrong. And that makes it sound a little bit less jargony
Yeah.
for the average day person.
Yeah.
So when you talked about the pensions, right? Obviously you have like $80 billion, tons of room to make investments. But let's talk about investments that, and you don't have to disclose the name or the sponsor or whatnot, but tell us a little bit about when would you not invest in something? Like, what are the red flags?
It depends on the asset type and the allocation.
Let's do real estate and private equity because that's what you kind of talked about earlier. So
Mhm.
we'll just continue that lineage of thought.
Let's just stick to real estate. Do I think that what percentage of, let's say as a trustee, you allocate what percentage should go to core versus value add versus opportunistic? And then you have to look at so a manager will come to you and saying, I can do this thing, it fits in this bucket. Now, is that bucket already full? Because the bucket's full, it don't make a difference, right? If there's affordable housing bucket, if that bucket's full, you can't add more things to it without asking for a difference. But the reason why that the allocation was set in the beginning was because it was based on what we think the entire world economy is going to do. So one is, do we have any room? Two, what's the strategy itself? Affordable housing might work, but if you tell me that generally across the board, affordable housing is going to have relatively similar yields for how much they'll be able to make. If you tell me you have some kind of secret sauce that can get the yields up somehow, and do so in a way that is proper and correct and is helping the people that live there, then we want to take a look. It's like, okay, you can execute on this better than somebody else can. It's very difficult to do that, though. Very, very difficult to do that. How do you buy? Do you buy land for cheaper? How do you do that? Do you buy HVACs for cheaper? How do you do that? So you'll get, the first thing is the strategy itself. Does it make sense? Does the projected returns within that strategy make sense? Then the manager, who's the one saying they're going to do it? Because typically there's plenty of options for most things. So if you're a manager, there'll be 20 managers, 30 managers that are trying to say they're doing this exact same strategy. So which one do we like? Which one is going to do the smart thing? Which one is going to be, when something goes bad, they come and tell you about it before you have to find out about it in the news? Which ones have the best operating background? Which ones has the most protections in place? Make sure something can't go wrong. So all that is happening at the same time. And so then to make a decision as like, for my core fund, I might think of something completely different than value add, which is supposed to be a very different type of person, different capabilities, different a lot of things. What's your track record? Obviously, you have to have done so for many years beforehand.
Mm-hmm.
Is the strategy big enough to take $50 million? And so like the allocation is going to be $50 to $100 million, but we're not going to be anything more than 10% of the fund. So therefore, it needs to be $500 million or more. So like, is your strategy big enough to do for $1.5 billion? You could bring a fantastic portfolio of single families that'll give you a 40 IRR. But if it's 10 single families and it's all worth $1 million, it takes the same amount of time to underwrite that as it does to do a $50 million allocation. So is it big enough? And then how concentrated is it? And do you believe in what it's concentrated in? If 2 years ago, 3 years ago, data centers was exciting, but not as exciting. Now it's super exciting. For what most people say is like data centers, yes, for sure. Then you get folks like me saying, well, because everyone's already saying data centers, yes, because that makes sense. Everyone's going to be buying them up, which therefore means that there's likely to be overbuilt, which means we should probably be looking at something else, because what happens after data centers become not as needed? That's happening at the same time too. So then you have to get through the people who are the super rah about it, the folks who are more sanguine about it, getting through all the different risks and objections and problems and whatever, and then saying, what is this now? What is all that's for one opportunity? And you've got 400 opportunities across various parts of the economy. Because you could tell me that, let's say I'm doing affordable housing and I'm great at HVACs and whatnot. And then we could own an HVAC company, or we could own a private equity fund that owns an HVAC company. So we're like, is that a good, like, we should know what the projected returns of the HVAC company would be. So if you could say, like, I can get it, HVAC companies are going down in price, and we're like, well, actually, our evidence shows that the other way around. Either is that a good thing that we're diversifying and saying, like, if it goes down, we are benefited from the affordable housing developer, and it goes up, we're benefited by the cost of the thing. Do we want to be able to have those offset? Or do we believe that for sure one thing is going to be the case and that it may not make sense to do the other? And all this stuff has to happen. And it's all for every single one of these things, because you can imagine there's 100 connections between every possible investment, and you have 400 investments. That's 10 to the 400th different ways that something could be connected. And it becomes a lot of work.
Wow. Dude. And I love that you, as a trustee, thanks for kind of explaining that, because you went through the whole principle of single families all the way to large deals.
Mhm.
But I love the strategic questions that you ask, because everybody can apply that to their own portfolio. Because you might say, hey, I want to just invest in single family homes, maybe I have a couple of duplexes. And now you're always saying, well, how do I ask just the same strategic question that someone like Trevor would ask? Well, do I want all my investments in this one city, or do I want to diversify across this? Just like how you talked about how data centers is a big thing that's out there being talked about now. But now you're saying, well, what if it gets overbuilt? Because it typically happens. Well, what if data centers or the technology for the chips, there's going to be new ways to cool the chips. There's going to be new ways to retrofit the data centers. And you might invest in a data center that in 3 to 5 years might become completely obsolete. That's a big risk. And that's where you have to figure out, as a trustee, how do I ask the right question? And more importantly, does the person know what they're doing? So I loved how you talked about the sponsor, the track record.
Mhm.
And I want to call this one thing where you said, are they going to tell you that something is going wrong before it hits the news? Because that level of transparency should be pervasive in everybody that you invest with. If something goes wrong, you want to hear about it in advance. And more importantly, they're giving you, hey, this is the problem. Here's the 3 solutions that we came up with. And here's a 1 recommendation how we might try to go and solve that problem. That gives you much more peace of mind before investing in an asset or a fund manager, whatever that may be, because otherwise you have your own pensioners to answer to.
Mhm.
And they're going to ask you the same thing, hey, why did you trust this person with my money that I'm expected to pay out on if you didn't vet them properly? So my takeaway is, for you listening right now, I brought on Trevor because I want you to get into the mind of someone that has a ton of experience. But I want you listening right now to say, why am I worthy? How do I become worthy of that investment? How do I become worthy of that consideration in the first place? And that starts with your brand today and how you take upon every single decision that you do today, because your brand is being built right now by what you do and also what you're not doing, because that also defines your brand. If you're not out there being kind, you're not out there being helpful to people, well, that's part of your brand, because that means you're only helping people when there is a quid pro quo type of relationship, instead of doing what Trevor does, like just going out there helping someone because that's a nice thing to do, allowed him to be in the position that he is today. So, Trevor, this is such a good podcast, man. I freaking love this, man. Oh my, I'm gonna make sure my daughter listens to this and my kids too. But all right, we talked about the pension fund. Let's go into Kopa, because I know we're almost at time. But tell us a little bit about, how does Kopa work? Because I think we understand the concept, like giving ownership. But if I'm just signing up for Kopa today as an everyday person, like, what does that experience look like? How do I get into that world that you created?
Yeah. So there's 2 major platforms within Kopa. And so it's important to understand that, because one is going to be about the marketplace itself. And the marketplace at its base is relatively straightforward. You can invest into a cash flowing asset anywhere around the world. You know what the dividend yield has been because we've tracked the financials from the year before. And then based on that, you can see basically if it's cash flowing, real estate doesn't change that much in value generally. So you have access to that. The shares are as low as $5. You hold it for a year, and then it'll float so that it'll become a secondary market. What that means is, and our job is to make sure that it's not just the big building. We're not a REIT. We're not Fundrise. You get individual assets that you get to pick. And based on those individual assets that you pick, you will get your dividend every quarter from the different assets. We want there to be smaller assets on, not just any type of asset. So single family, multifamily, retail, but we like bars, cafes. Like, where do you actually go in life? And then, of course, if you go to that cafe or that bar or that restaurant or that office space, if you own it, you're more likely to go there more often. If you're likely to go there more often, you increase the NOI of that place. But then, because you have people that are around the world who also want to be able to own, particularly the United States is a very attractive market to many folks internationally, you get to own it and then say, if you buy it at $5, someone offers you $6 for it, you can decide to sell, or you cannot decide to sell. It's up to you. But they essentially will be buying a share for whatever amount that you're willing to sell it for. But you don't have to. You can keep it and you just let it grow. But at $5 a share, you could buy into all the places nearby you, or all the places that you wish that you had gone, or the places that you loved from your college days, or the places that you loved from your favorite vacation. All the above is possible. So we put it on blockchain because it's much, much not because of anything new finagled or whatever else. We put it on blockchain and it gives you back US backed currency. So PayPal will be the number one thing that we use, but also USDC. It comes back to you as a asset backed thing because it's so much cheaper to send that way. So if $5 is your
Mm.
investment, and even if you made 10% a year on $5, that means that you're typically making about 25 cents every quarter. It's not a lot of money, but if an ACH transaction costs you $2.50, well, then you would lose money just by getting your money back. But with blockchain, we could do that for 0.000001 cent. So now anyone around the world can do it, and it's much cheaper, much easier, much faster. So that's Copa Market. We did that first. We actually completed that part first. And that's the thing that we're going to be able to use to go all around the world and let people get themselves out of poverty just using regular economics. But the way that we do that is by buying a share, a piece of that property. So we don't do gentrification. We want the original owner who has done good done well by the property to be able to continue to be able to do well by it and continue to own it, continue to run it. To be able to do that at scale, we had to create the second platform, which is the AI platform. And we said, well, we can't lose anyone's money ever, not based on our own mistakes. So therefore, we need to be able to underwrite and do due diligence on a property. And we couldn't just do a little piece of one thing or say, oh, my back of the envelope underwriting looks like that. No, it needed to be a full institutional level due diligence. We knew about AI before ChatGPT. It's not generative AI where we have to just make up stuff. There's none of that. We ingest our first thing that we're launching with. We'll be comparing the first 24,000 lines of data across 80 different documents that are for true deep due diligence from whatever I did in private equity. I've done $2.5 billion of experience. My team has done 12. We've taken all that we've known, all the things that we could have ever asked for that go into an investment community memo or anything else. And we say, great, someone, a broker, a seller, a borrower is going to apply. They're going to give you the documents, the 80 documents you need to do for due diligence. We're going to extract the first 300 lines of data that are most important to getting a deal done, but it's going to increase over time to over 800. We bring all that in.
Mm.
We then compare it against the documents, against what they said, and then we compare those information against third-party information that they can't go back and game. So you can't game your municipal records and your taxes. You can't game Google reviews. You can't game the USPS. So we provide a lot of things that someone else, if all those things add up and they line up the way they're supposed to, then we say, great. And then we give you a task manager to make sure that everything is actually correct. And then once we have all the information that you said is all correct, we say, great. Now you want to write your investment committee memo or your credit memo or your offering memorandum? Cool. We know what's right. We can go ahead and generate that for you, but it's based off of your own data. And that's our first product. And we're going to have another 12 that were already in the pipeline. We have 2 that are actually already in prototype. And we'll be able to replace Argus for commercial properties and replace Excel, we replace decks, we replace asset management and property management. We're going to grow because once we have all that data in the first place, now it's about showing it to the right people at the right places and the right times.
All right, let me kind of break that down what I heard, because in the beginning you talked about the market, right? Kopa market. That's where you can go on right now, find different assets that you want to own a part in. Are these just apartment buildings right now, or you said infrastructure, right? What does infrastructure mean? So people understand, like, what are they investing in?
So to start with, so Kopa Market's not live right now. And the reason why we don't have it live right now is we said, if you want to be able to pick and own your world in the way that you want to, you probably want to be able to pick from at least 10 properties, but generally a lot more than that. So you get a chance to choose around. So we could either raise a bunch of money to go buy into those properties, or we could generate the money by making a service that people really want to use, i.e. with Kopa Hub, that we can then use and go buy to those different properties. But to answer your question about property types, real estate people love to think about things in terms of property types because it's like, oh, I know retail, I know hotel, I know whatever. But because of my background more on the impact side and like, what does it actually mean? And on the pension fund side, what does it give you, right? So if I can point to this building and it makes 7% based on last year's cash flows, and this building makes 9% and this building makes 6%, it could be a multifamily, a retail, and an office. It could be a hotel. It could be a multi and retail on the bottom. It doesn't really matter. If you believe in where the location is, and you're going to know your community best, if you believe in where the location is and the tenants that are in there, you'll be able to see what the outcomes are. So we created Kopa Hub because for Kopa Market, it's literally everything. We could have farmland if you want. And so we built it so that we can literally, we've gotten all the way down to chicken coops.
Wow.
Yeah, like we have everything so that you can make your choice, because if you live in a rural community, you may want to invest in a certain farm or a certain orchard. So it's not our job to tell you what you should be able to own. So the way that we first built Kopa Hub was specifically for Kopa Market to say, like, we don't know you from Adam. There's anyone around the world anyone in the US that wants to apply. They apply, and we should be able to create a system that would take out all possibility of failure. And so we created that for us first. And now we're giving it to everybody else as this SaaS platform that will allow people to, we're going to be super fast, but everybody else can now be 8 to 10 times faster, get deals done much, much faster, get able to do a lot more deals a lot faster, and not make any mistakes, and have institutional level outcomes in minutes. We can scan 50 documents simultaneously over 4,000 pages, and we can do it in 30 minutes. So what used to take 3 months now takes 30 minutes.
See, this is what I want to call for people, because I want to make sure they understand the value so good, Trevor, because think about it. If you were just like, you're an everyday investor, you're trying to figure out, like, okay, let me look at this property. Let me look around. What can I get for rents? Do I believe that rent number? And do I call a property manager to say, what do they think about my rent number? And then they look at some job data. Is the population growing? And here, that extrapolates to way higher. Like, think about your everyday mortgage. When you're trying to apply for a mortgage and buy a single family home, you have the underwriter at the bank saying, hey, give me your bank statements. Give me your pay stubs, because they're trying to verify that you are who you are and you make what you make. Mm-hmm. Same concept here, but now you extrapolate to an apartment building, institutional level assets. This is why it's so powerful, because you, as a person right now, you don't need to go hire a 6-figure underwriter to analyze this property. You now have the technology to help you minimize the cost all the way, pretty much chop it completely because of AI. But now you're able to have the same level of institutional knowledge and the rigor that they get to apply when they're looking at an asset, because of Trevor and his team's experience doing $12.5 billion of transactions across their lifetime. You get to get into the brain and borrow their brain without having to get them on a podcast, without having to say, hey, can I pick your brain and come out for a coffee? You don't need to do that anymore. You get to tap into their brain, their resources, and their process. This is why it's so valuable. This is why I want to bring everybody on, because not only do you get access to a whole breadth of investment options, you also get the know-how, the process, the tools to make that decision as an intelligent investor. So you might have all the data from Kopa Hub, but now you get to ask the same questions that Trevor shared with you earlier about how an $80 billion pension fund might evaluate their decisions in terms of, how do I allocate my portfolio? Do I want to be overweight here? What's the thesis behind this? Because those are high-level questions that are probably very personal to you listening right now. But even if you are a real estate investor, a developer, You have to get into the mindset of your investors, because if you don't know how they think, how on earth are you going to protect their interests with their hard-earned money, especially like a pension fund? They're going out there, firefighters going out there risking their lives every day, putting out fires. But you've got to take care of your obligation to them, to take care of them when it's their time to retire. So, dude, Trevor, this is so crazy. I love what you guys are doing.
Thanks, man. It's been a labor of love. We've had to invent some new things in AI that have never existed to do it, but it's been worth it because it's like, how do you make sure that you save? My thing is, if you can have your own, if you want to put, let's say you want to do some kind of affordable housing deal, our cheapest plan is $1,500, and it replaces an analyst. So you can literally walk into your office, your job at home. Someone else has filled something out for you. It now comes to you. Your job is basically done. Your job is just to do ticketing, tying, and we give you a task manager that does that. Makes it very easy. But let's say you wanted to really scale up a business. Normally, it's going to take you a week or two to make your first evaluation on a deal. You could also just do it where, like on a monthly plan, you get 12 per month, or in a yearly plan, you get 180 per year. You could send out those links to all those people. They fill it out, and you could have 10 things and look through 10 different deals like that. And it doesn't just need to be in your area. It could be anywhere in the country, because the way that we have our stuff set up, we're scanning for information from around the country, municipal records, everything else from everywhere. So you could say, oh, I want to look at cash flowing stuff in Ohio or in Louisiana or in North Carolina or in Boston. And you can do that. And by the time you walk into work, you're like, oh, this makes sense. Because maybe it's just me, but when I was in, especially as a broker, the amount of time of inputting data and like the brain damage of just, oh God, this, and oh, I made a little mistake, and where's this in Excel, and I got to find this, but that's not a problem, because in Argus it gets really bad. If I could spend time just focusing on the big picture and like how does it actually work, then I would make much better decisions. So what we're doing is we're removing that brain fog and letting you actually be clear thinking of like what makes sense for me. And maybe this thing that I would have been able to think about a solution before, but I can't think about it now because I'm tired. Now you can be like, all my day is just like, oh, this part's easy. Let me do the really thinking part about how to solve big problems, and how can I expand and grow this thing out. So we're making it so that smaller investors who have never had access to this stuff before, because all the big folks still need it too, but the smaller investors, they've never had this before. And I know it drives people insane because they want to do the best job. Their heart and soul is in this thing, but they can't because there's only so many hours in the day. So if they could then be able to be empowered to go out and do more places and do more deals all around the country or even around the city that otherwise don't get love, that's how you find where the real gems are. But right now you can't do that because you can only go to so many places, see so many brokers, have so many lunches. Now you could do that times 10, times 100, and get the benefit out of it very quickly.
And as someone that I underwrite deals every single day, and as someone that does that every single day, I can tell you firsthand how much time it takes.
Mm-hmm.
And I can't tell you how many times people get in my DMs and say, hey, can you look at this deal? Is this a deal? And today, why I wanted to highlight this so bad is for all of you out there that thinks, I only have 1 or 2 hours a day. I have 2 kids at home. There's nothing I can do. I have no time. But now you just had this tool. I'm kind of taking excuses away from you guys that are listening right now. You don't have any excuse because you can ask those questions that Trevor asked earlier about those high-level strategic portfolio allocation questions that some of your best minds in the world, the best fund managers, that's what they focus on.
Yep.
They're not into the details, crunching a number, putting in a little number into a cell and going, oh crap, I missed the cell, so now I got to go figure out, what was the ultimate impact. He solved that problem for you. So now you can focus on the big questions that truly matter for your situation, your goals, your family, your legacy.
Actually, I'll do you one better. A lot of the big fund managers are doing that. They are going at individual sales.
They are.
And they just have an army of people who can do it. So in the short term, if you think of a competition with the fund manager, great. But there's no way that they could throw 10 analysts at a deal. It still wouldn't be faster or more complete than what we do. So they're going to be using us as well. But in the short term, if you want to get a really quick advantage, whether you're buy side and doing the actual rehabs and developments, or sell side, you want to get more deals done because it works for both people. We take the information you get and then give you a link that you can send out that's interactive, that anyone that wants to can look through it, see it, and be like, oh yeah, I want to look at this deal. And like that can be your package done like that. So now you can just do more deals, which means you get more revenue in. Are the cost of us, we're
Yes.
designed to be no more than 10% of what you save on a deal.
Dude, I mean, for people out there, sometimes we say like it's a numbers game, right? Well, when you could analyze and look at more deals than anybody else, chances are you're gonna find the best deals. So, guys, please, please, please lock in on this. Listen very closely, repeat this podcast. I don't care what you do, but this these tools are now out there. What might not have been possible 5, 10 years ago is now possible for you because you don't have any excuses anymore. So I know we're almost at time, Trevor. I have one last question for you, and then I want to talk about how do people get on a wait list for you, right?
Yep.
Because on this podcast, I ask one question every single time
Okay.
because I just want to get everyone's perspectives, and we might have hit on that. But the question is, why is affordable housing, particularly the lack of supply of affordable housing, has been like so hard to solve for?
There's so many reasons. And it depends on which part of the country you're talking about. A lot of it is policy, right? Those that
Mm,
most of the US is zoned as R1 because R1, it's the idyllic suburban way that a lot of people think of the American dream. So if you start adding in multi-story apartment complexes, that is no longer so cool. And people who have their R1s want to keep it that way. So, and they typically, if you have your R1 zoned house and you live in it, that is an asset, which means you've built up equity, which means you can now fight to keep things that way. Who goes to the city council meetings to advocate for those things? The folks that already have. Everybody else is working. So
yes.
that's number one on the policy side. And that's what democracy is supposed to be, except that the folks who are working can't go to city council meetings or whatever to make sure those other things happen. First piece. Second piece, if you've got the chance to build something within certain counties, there's a lot more like, to build it affordable. You have to jump through many more hoops. So California already has CEQA, which yes, we repealed some of it, but we have CEQA, so that's for everybody. And then it's like, well, to be able to build it, if it needs to be a capital A affordable in Section 8, means you got to hit these different standards, which costs significantly more money to build. So now your cost has gone up. Well, if your cost has gone up, you're no longer at market, and you're also asking me to make less money in rent. So someone has to fill the gap. And they're like, okay, well, who's going to fill the gap? And now it's got this whole circular thing where we're trying to help. And me as a 23-year-old in Sacramento was on the other side of this being like, yeah, let's add more regulations. And I'm like, ooh. I mean, can we let people pick? Like if we let people pick, maybe that's a better idea. So affordable on that side is a different thing. Affordable that might be more naturally occurring is a different thing. And some people say, well, I just want to maximize what I can get this year versus some other people saying, well, I want this to be a place for families that can stay over a longer period of time with less, like, I don't want to have any parties at night. So that's an individual choice. So you have that as well. But then people that are otherwise been landlords are now being more squeezed because expenses have gone up and inflation's gone up. So now they're trying to say, well, I got to be able to get something out of this thing to be able to pay for it. So it's this circular thing where everyone's kind of at the trough trying to say, like, hey, I want more. And then it has to go somewhere. The cost has to go somewhere. And then, of course, the fact that we don't build as much stuff because we have the legislative hurdles, whether at the city and county levels. So now we can do more. And we have the whole TOD thing, and we have the ability to put ADUs in the back, and those are good starts. But at the end of the day, it's a mentality shift of saying, hey, look, what can I possibly do to scale this thing and make it be able to go bigger and not do so in a way that hurts the people who live there currently, but just you don't get automatically hurt because you have an apartment building amongst a bunch of single family homes, which is of course the worst use of land from a sprawl perspective. And as someone who's from Altadena and saw just what happened, that wasn't even sprawl or the Palisades. Like you start going up into hills and areas that don't necessarily need to be built on without having more. You could have more density and happier people and more walkable. So there's a bunch that needs to go back and forth on that is starting to change now because we're at a point now where housing has become a real problem, and lack of being able to afford it has become a bigger problem.
And I just love the perspectives that you're able to share. And I loved how you're, man, I got to get you back on another podcast to talk about how capital markets work, because I think not a lot of people even know that. And if you understand where the financial incentives are and how to attract the right amount of capital, then that ultimately leads you down a path of making the impact of whatever you want to make, right? You get to choose who you want to help, how you want to help them, Copa is a great start for you to figure out, hey, maybe I want to help this area, this geographic region with my investment dollars, because you get to cast a vote with your dollars, not just your vote, but really your dollars. And that's what Copa is enabling for all of you. And you guys got to check it out. So Trevor, for people that want to find out more about Copa, is there a wait list that they can get on? Like, I know it's not fully live yet, but where can they go?
Yeah, so we're in our beta stage right now. So we have the full product working, and now we're doing some final things to make sure that there's full security. So we're on the same level of security as Intralinks for all those that work with secure data rooms. So that's going to be done January, early February timeframe. In the meantime, we're going to have a wait list. We're actually going to be launching it later today, or not? Maybe no. It looks like maybe later this week. But in the meantime, you can go to kopahub.io, and then I'll send over some additional stuff. But kopahub.io. I should also say it's not the World Cup. It's not Copa like the World. KOPA means active participation, so that everybody wins in Yoruba, the language. It's the number one tribe in Nigeria, or the largest tribe in Nigeria. But the idea that we all get to win, we all get to own, because we're all in this together. That's what Copa means. But yes, waitlist will be coming out. I can send it to you, Kent, and you could have it on the podcast and the link. But yes, we'll have that. And then we're also going to do a thing where those that refer the waitlist to others who are also interested, we'll be able to provide some additional financial incentives and get folks that want to be able to use things for free or get a discount, because we want to spread the movement early. And then as we do so, we let the people that have done the most spreading get off the waitlist earlier to get the most benefits faster and get the biggest discounts. So that'll be coming in January, but you'll see the link later on this week.
Man, all right. I'll make sure I link that in the show notes below. For those of you guys that don't follow Trevor, make sure you follow Trevor Fay on LinkedIn. Follow them on all socials. I'll make sure I put those in the links down below. But man, you guys got no excuses after listening to this. You know that these tools are out there now. I mean, you can buy a share for as low as $5. I mean, I'm going to be one of the first investors on the platform. Again, this is not me soliciting any investments. This is not investment advice. I'm not a financial advisor. I'm just here to share the information with all of you so that you guys figure out what is the best path forward for yourself, your family. And that's all we can do here, because it's up to you to own your future with Copa. All right.
Thanks,
Trevor, man, thank you so much for coming on, man. This has been such a fun podcast, dude. This is a freaking blast, dude.
Thank you, man. No, seriously, I very much appreciate it. This was really fun for a Monday morning. I'll take it all day.
All right, and we are out.
Dope.